Hello guys, and finally back. And today I have something exciting. So today, uh, what we're going to do is we're going to work on a new project, which is going to be traded on interactive brokers. So here I am, like setting up my TWS account. So just give me a second. Should be done any moment. And so today, what we're going to do is Oh, now it works. So today what we're going to do is we're going to set up the TWS API on the TWS platform. So I'm going to show you how to set up Python and how to connect to this, connect to this platform. And so we're going to write a simple trading bot. And then I'm going to share with you, some of the projects that I want to start on interactive brokers. So we'll be focusing mainly on futures against like CFD or futures against spot arbitrage. So we're going to try to trade like assets on the CME, like the GC, which are gold futures, or focus on the indices here, right? Or also like the MBT futures, which are Bitcoin futures. And also I'm going to focus on like Eurex futures, right? So we can trade the German stock index, the DAX, which is also pretty nice. And also like after we're done with that, I'm also going to attempt trade what was it? Options, like synthetic futures, construct using options. So as you know, like if you put a call and a put together, we can create a synthetic futures position. And because I also like specialize in futures arbitrage, we can try to, create a synthetic future using options and apply the same strategies on that too. So a lot of new things that, you can like expect in the upcoming videos. And like, of course, you might be asking, am I still trading hyperliquid, or what is the situation with the DEXs, right? Because right now, like as you can see, I'm still trading hyperliquid. So of course, like if I share the strategies with you, I can like show you, yeah, I'm still trading this 100K account and we still have very good results. And like if you have any questions regarding Hyperliquid, of course, feel free to ask and I'll help you with the Hyperliquid project or any DEX. But I realized that, doing the project on Gravity, which is another DEX, it's very similar to Hyperliquid, and I feel like I'm not like creating like any extra value, right? Because Hyperliquid is, working quite great. It's like for this current month, we're over $3,000 in profit on this account. And I was thinking to myself, okay, I can like create more DEX, which is like still ongoing, right? So here someone's already asking, what's the update on Gravity? Actually, not so good, because over weekend I found a bug, and that's why I didn't want to share the code with you guys yet, because I haven't tested it. So over weekend, I had again some unhedged positions, so I lost roughly $30 and $40, and I still need to fix a few bugs, right? So after this weekend, I have applied some new changes, and I'll share the files with you once I'm certain that there will be no issues, right? And so again, the strategy logic is the same as trading hyperliquid, but also like I found out, and like I think Dominic, or like a member came to my stream and he said that the liquidity on Gravity is not that good, and he was right? So not much volume there, but I assume again, if you have like a 10K or a 5K count, it should be okay. But I still need some time, to test Gravity and make sure that everything is working okay. So I'll keep you updated on the Gravity project, and of course I'm planning to add Lighter and Astro integrations or DEXs. But I felt a bit how would I say, a bit burnt out from doing the same thing over and over again, because trading ultimately is very boring, right? Once you find a profit strategy, especially if it's automated, right? So we haven't like touched hyperliquid strategies in a very long time. So and so basically it's just taking the same concept and then applying a different exchange. And I was thinking, okay, maybe I should take a small break, go to interactive brokers. There are still a lot of strategies that we can try to apply on futures, and liquidity is like very high, right? So one big comparison between DEXs and trading like CME futures is that the the liquidity, at least from our retail perspective, is basically infinite. So when it comes to scaling, right? So for us, when it comes to scaling, there is almost no diminished return on the strategies where you see like here we have like GC futures December. Here the volume is 14.7 billion US dollars, right? So the volumes are insane. And so when we run these strategies, of course, competition is higher, but again, liquidity is very, very high, so we won't have to wait like minutes or hours to allocate our positions, compared to hyperliquid. So that is the reason why moving to internet brokers, just to have a little bit of uh, you know a bit variety in my projects, and like what I enjoy doing is not just making money, because of course making money is fun, but the research part, starting new strategies and exploring new opportunities how to make money is always like very exciting to me. So yeah, so this is just a quick update on the current projects, and let's yeah, focus on C-Trader a bit. Here's a question: what's your thoughts on C-Trader? I think C-Trader and MT5 are like very similar. Like they basically in the CFD world. Maybe let me draw you like a very simple uh, like a chart, right? So when it comes to CFDs, right? So CFDs are consist of so in the CFD world, what brokers do is they have something like a liquidity provider, right? Who provide the CFD liquidity. So for CFDs, like if I like now use a larger font. So here with CFD liquidity providers, they're always almost the same, right? So there are like prime LPs or whatever, and so the CFD liquid providers, they provide liquidity to the retail brokers like IC Trading, IC Markets, Tickmill, Pepperstone, whatever. And so the difference is only like if you have MT5 or you have C-Trader, right? So here, so you have MT5, and here you have C-Trader. So the main difference is like maybe in the technical infrastructure. I think C-Trader is like slightly more advanced than MT5, but they use the same underlying liquidity. So from the execution standpoint, once your order is routed to the liquidity provider that's managed by your broker, you basically have the same trading conditions. So it's mainly a question of user interface, the API that you're using. So you have to choose between C-Trader. If C-Trader uses fixed API, right? So I think in terms of like algorithmic trading, C-Trader is slightly more like advanced, and I think their UI is a little bit better. Uh, but like from the cost perspective and commission and spreads, it still depends on the broker. So if you were to choose between MT C-Trader, you won't find much difference when it comes to like the selection of assets or the products of your broker. So this is just a quick. These are my thoughts on C-Trader. Okay, so let's open our project. And so today it's going to be like very chill, very simple. So I'm going to share with you, just a quick way how to connect to interactive brokers. Most likely some of you already know how, but I think like for those of you who, came to my stream and only uh, watch the Hyperliquid or the DEX projects, I think it's like kind of fun to, show you how we can like run these projects on interactive brokers. So I'm going to call this project, let's say IBKR arbitrage or something. So we're going to run arbitrage trading strategies here. And so we're just going to create a new project. And so now the only thing you need is we're going to use interactive brokers. And when we also run our arbitrage, right? So we will also try to compare pricing with CFDs. So we're still going to use MT5. And as I said, MT5 is very cheap. And that's why when it comes to arbitrage trading, I like love using MT5. But I believe that we also have the like option to trade CFDs on the interactive brokers, but they might be slightly more expensive. So we'll have to see, to compare the cost between those two platforms. Okay, so we don't have much money here, right? But right now we're still like going to be in the testing phase. So once we have like some initial strategy running, I can deposit. I actually requested a demo account in Interactive Brokers today, but I forgot that when you request a demo account in Interactive Brokers, it takes like 1 day to process a request. I think they like process it like once per day at 4 p.m. There's like an automated system, so we'll have to wait until that's done. In the meantime, we can like code on this. So to start with Interactive Brokers, we need to install TWS API. So what we need to do is we need to go to the like Interactive Brokers GitHub section and download the API. And here, so you can't install this pip, right? So it's not available through pip. You have to like go through this Interactive Brokers GitHub and download the files here. And so once that is downloaded, we can then yeah, install this. And I believe that maybe it is maybe it is installed already because let me double check that. Uh, Actually, I think, oh yeah, it is installed already. So, you would just proceed with just downloading, installing, and then your IBKR API will be, available from the Python client here in the C drive. And here you have like a setup file to install the API. So in my case, it's already done, so we can skip this step. And so now let's proceed with this project. So your question, does IBKR allow to open account outside US? Yes, so I'm based in Europe, so I assume that Europe should be fine. But I'm not sure if it's from India. By the way, Interactive Brokers has like two websites. There's like the US entity, and I have like the .ie, which is the Ireland entity. So I'm not sure, like maybe you're accessing the wrong website, but just check online. You'll find out if it's available. Would you mind sharing Git repo link? To which Git repo which Git repo are referring to? So if you're referring to today's Interactive Brokers project, then it's kind of like empty right now. But as we add more and more, I'll be very happy to share some of or all of the code basically that's in this project. So once I upload it, I'll share it with you. Oh, and you mentioned Git repo. So I don't actually provide Git repo access publicly. I just download the source files, upload them on my website, and then you can download it directly from my website instead of Git. So this is how I do things right now. Okay, so Cloud is initialized, and so today what I'd like to share with you or do is like show you the strategy, right? So if you remember, we did some gold arbitrage project. So what we're going to do is first I'm going to create a project.md file or cloud.md file so we can create like sub the project, right? So here what I'm going to do is so we have our markdown and IBKR arbitrage project, right? So in this project we're going to run arbitrage trading strategies between IBKR and MT5. And so one strategy that I have in mind already is Bitcoin funding rate arbitrage. What I mean by that is that like I will show you the backtest later, right? Once we extract the data. But I was thinking of like, extracting data from MBT futures, which are Bitcoin futures. And when you trade futures with expiry dates, they have like a premium, right? So oftentimes the futures price is above the spot price. And so from this premium, we can like compute the implied annual rate, and then we can run a funding rate arbitrage on our IC markets platform, right? So here we have some positions. And so if we, for example, look at, well, not MBT, but IBIT, right? IBIT on IC trading is the Bitcoin ETF. So basically it tracks the price of Bitcoin, and when you look like in the specifications here, you see that there is a like annual rate to fund a long position, which is 5.88%, right? 5.8% might sound like a lot in funding, but if the premium on the on futures is higher than the long like annual rate, this basically is a funding rate arbitrage. And I mean this project, yes. So like if you're member, a subscribed member ATJ Research, you can, then access the code and download the project that I'm going to work on today. So yeah, so we're going to compute the implied funding rate using by checking the futures premium and compare that with the IBIT ETF on MT5, because here the funding rate is 5.88. Of course, if we want to try to run the strategy against IBIT on Interact Brokers, we can of course do that too, because Interact Brokers has CFDs, and that has advantages, right? Because then we don't have to do the transferring of funds and so on, so everything is on one account. I believe the Interact Broker still separates the margins and the funds somehow internally, but at least it's all in the same space, so we can easily like rebalance on the same Interactive Brokers account. And so if you like look at the specifications on IBIT, right? So go on descriptions. What you also find is that we can like check the the specifications here. And so if you want to go long and we want to buy on margin, first I would have to change my account to a margin account. So right now but it's CFD, so it's margin by default. So let me just try to see if let's look at the cost impact. I need to check the estimated funding, right, on IBIT. So I think like if I just buy one, maybe that could work. So I click on cost impact, and then it can also like compute the implied like overnight charges, right? So here there's nothing available, but they'll figure it out, right? So on MT5 it's 5.8%. I was assume that Interactive Brokers it's something similar, right? If we go to the Interactive Brokers website, so if I write like IBKR CFD funding rates, or you can call them swaps. So here on CFDs, they have actually the funding rates here. So right now it's 5.31% for long positions, roughly, and 2.13% for short positions. So you make money on the short position on CFDs, and you lose 5.1% on long positions. So it is like very similar to MT5. So we can try to run both strategies and see, how it performs. Are you building arbitrage or just mirror version one? An arbitrage. So we're going to always try to compare the pricing between two assets. And so for example, MBT, which is the Bitcoin futures, running against IBIT, which is the Bitcoin ETF, right? Or MBT against MT5 CFDs or MT5 Bitcoin. We can also try that. And we have like GC, which are GC futures against gold, and indices, right, against CFD indices, or like again ETFs. So it's all about just comparing the prices between the related assets, and and like maybe we won't find much, right? But I believe that we can find like enough, right? So like we're still going to try and see if we can find anything. And I think part of like researching is not like thinking, oh, we're gonna get super rich. Of course, that's the motivation, but a lot of times it's like, okay, it doesn't work that much here, but maybe I'll find something that actually works, right? And I think that on Interactive Brokers we have as many opportunities as on Hyperliquid, right? And like I want to also diversify my strategies a bit, because having everything crypto makes me actually slightly nervous. I don't know why, because still in the crypto space, I feel like there's always a chance I might, how would I say it? Like it doesn't feel as safe, right? Having money on a crypto exchange or a DEX wallet than let's say on like a regulated firm like Interactive Brokers. But that's just my subjective opinion, because the crypto space has shown that it has some vulnerabilities, right? Like FTX is a classic example. Even a centralized exchange can cause a big loss, and there are a lot of like hackers and scammers that just try to steal your crypto wallets, right? And there are like, if you do everything correctly, it's safe. But I think having a regulated broker like Interactive Brokers actually makes me feel somewhat safer, right? Like having your money in a bank somehow feels safer than just having it somewhere in your crypto wallet. But you might argue with me that no, 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 the bank can always like freeze your funds, but the crypto is always yours. So there's like this debate in crypto. I had a very poor experience with IBKR with an account in Euro. Everything is restricted basically. Yeah, that is true, right? There are a lot of restrictions. For example, if I want to trade IBIT, right, I cannot, like as a stock, so I cannot like come to the exchange because they I'm a European client, and that's like very unfortunate for me because ESMA restricts the access, like I believe too much, right, for me to trade effectively. And I was thinking, when I used to trade uh, on Interactive Brokers quite a lot, like last year, what happened is that like I made very high volumes, and I was thinking, okay, maybe I should open an offshore company that doesn't have a restriction that can trade with Interactive Brokers. So I was like already considering that. My C drive is empty almost. That is interesting. So 1 second. Yeah, I have 1 MB left on my C drive. So 1 second, I'm just going to uninstall some apps. Like, that is interesting. Okay, let me just do a quick cleanup and then we can proceed coding because now everything feels like it's, blocking me. But yeah, but again, on interactive brokers, like if you don't trade stocks and like focus on futures, right, or CFDs, like a CFD is basically a workaround, uh, like a workaround to access, American stocks, right? So European clients are forced with buying CFDs. But the worst part about CFDs is like CFDs are leveraged products. So every time you want to buy a stock on internet brokers like IBIT or like Tesla or whatever, you basically buy it on margin. And because you buy on margin, you're basically taking a loan, right? And so you're paying like every day the funding rate if you go into a long position. Whereas if you bought a stock, you won't pay any funding rates. So it's actually much worse for the European client, right? It's like so sad because if the European client was just holding the stock, he won't pay the funding rate, but because he's trading the CFD, first of all, he's trading like he cannot like trade with interact with the order book. He has to always, either buy at the ask or sell the bid. So it's basically an OTC product where you are forced to, you know, uh, accept the opposite quote. So you always pay the spread. You can't add liquidity to order book, and that is like for me like very very sad because in reality, if European clients could trade American stocks like without margin, right, it would be financially much better for that client rather than having to trade CFDs. So I kind of hate CFDs in that regard because they have this hidden margin and funding rates that a lot of people even don't know about, right? So, but there are alternatives. Like you can trade like, some European listed stocks. Like if you trade on the London exchange or the German stock exchange, like you can access some of these like assets in the form of a European ETF, but they're not as liquid or not as good as the actual American stock, right? And yeah, these are like in my opinion, I hate this, right? This is probably the worst thing ESMA could have done. Instead of providing direct access to the market, they protect the client by actually offering a worse product, which is a CFD, and that's stupid. I don't know what they're doing. Are you aware of any legitimate solutions? Yeah, just open an offshore company outside the EU and trade with them directly. Like open a company. I don't know where you're from, but like just open a company and putting money there is way easier than dealing with that as a client residing in the EU. And like if I like come back to interactive brokers and start like trading like again seriously here, because on interactive brokers I occasionally like run some testing strategies, but I migrated all the money to Hyperliquid and other dexes right now. So yeah, if we like find very good strategies, I might consider opening up a new company that's outside the EU, so I can also like trade the classical stocks, because we are missing out on opportunities, because European stocks are also very expensive, right? Because if you trade IBIT, the cost to open a trade with any size and interactive brokers costs $1, right, to submit an order. So it's very cheap. And like if I want to trade like a German stock, right? Let's say I want to trade Volkswagen, right? Uh, or VW. So if I want to trade something like a German stock, again, I have the options of CFDs, but I don't want a CFD. If you trade IBIS, they charge like a percentage fee up to a cap, which is $27. But for a retail client, like it's very inefficient to run like cheap or arbitrage trading strategies. So it's more like for long-term investing, right? If you want to buy stocks, it's more about holding the asset or like doing swing trading. But for market making arbitrage, again, it's not very good. So what we're left with, the only cheap assets that I can actually trade are futures, like on CME or Eurex, right? Or maybe other futures exchanges. So I'm left with options and futures. That's all. If I had to trade stocks, that would be kind of useless for me. Yeah, I still need to fix the local. Let me just delete some files. So sorry uh, for chatting with you too much, but hopefully my answers are not too boring. Okay, so let's uninstall some app. We'll add or remove programs, and then we can proceed with coding. 5 Copilot, 3 gigabytes. I'll need Copilot and use it. So we can remove Copilot. I think MT5 is also taking quite a lot of data. So guys, if you have like MT5, what MT5 does is like it downloads like all the historic data, the tick data, and so on. So what you can do with MT5 is you can just like delete, one of the folders here, and that should also like free up some space. But you don't want to like delete your current account, because right now these two accounts are active. But this could also be a reason why it takes a lot from C drive. Once I had like 10 platforms open, and it took like 100 gigabytes from my C drive. So that's like one of the reasons why you might, have missing slots in your hard drive, basically. Okay, so the uninstalling is pretty good. So I feel like 5 gigabytes, which is fine. So now we can continue probably. Let me just refresh the folder and see if I've created some more space. But yeah, right now we have much more space now, so we can like continue, or actually just start doing this project. So today, what I want to do, as I said, is analyze the spread between MBT futures and MBT futures, what was it? MBT futures and IBIT ETF, right? So we're going to run some like easy linear regressions, because IBIT, of course, doesn't have the price of Bitcoin, but it tracks a price. So we'll apply a linear regression to approximate the ratio between IBIT. So how much IBIT do we have to buy to have the fair amount of Bitcoins, right? This is what we're going to do. And then we're going to compute the futures premium. So basically this is or the basis, right? The futures basis, and see if the basis amount is over or below the threshold to run a funding arbitrage, right? So the premium must exceed the long funding rate on IBIT to make this a profitable hedge. And so once we've run an analysis on that, we can then like try to create like a test trade. Like I think I can like open long position on internet brokers, because if you can afford to run the analysis on a single platform, it's better, because then you can like manage all the trades from a single broker, and you don't have to do any rebalancing like we do in Hyperliquid, right? In Hyperliquid, we have one platform here, MT5 here, and we have like two positions or like two platforms always open at the same time. And this is like where the liquidation and rebalancing becomes an additional risk for our trading strategy. So here I'm going to create like a folder projects, right? And in folder projects, what I'm going to do is I'm going to do MBT versus IBIT. Bye-bye. My colleague's just leaving. MBT versus IBIT. And so here, what I'm going to do is, okay, I just need to confirm the uninstalling. So actually, the project file that I'm doing here, actually, I can just put it in here. So here I'm going to create like a project.md file in this project folder, and here I'm going to skip MT5. So what I'm going to do here is an IBIT ETF CFD. So what I'm going to tell Claude now is like when you also want to enable the API connection, we need to go to global configuration, and then under section API, you go to settings, and you need to enable ActiveX and socket clients. So this allows our Python script to connect to TWS, and so we can run queries such as get market data or like submit trading orders. Okay, so let's copy the path reference here. So please, today I want to work inside the project folder. So here I'm just telling Claude that we're working in this folder today, and that's what we're going to do now. And so the next thing I'm going to do is I'm going to run a very simple backtest, or create like a very simple notebook where I want to extract the data from MBT futures and also from IBIT. And so then I'm going to compare the spread between them and tell you if we can like run any arbitrage there. And it, so now we're going to use historical data. And so I didn't bind data feeds, right? So whenever you trade futures, you need to like subscribe to data feed, and it's quite expensive for companies. It costs like, I don't know, 100 or 100 something dollars a month. We can also use like a third-party provider like Data Bento, which is also going to be nice. And but once we need the live data, I'll just show you, how to subscribe to it or how to use any external providers. Okay, so here Claude is just setting up the virtual environment and everything that we need with it. And like I think the interesting thing like with TWS is like you'll find out that coding with Claude or coding algos is like very easy now, right? I feel like all you need is just have a good understanding of how the market works or how you want the strategy to work. And if you're able to relay that information very effectively, then I think it's like a great tool. Of course, if you write something like create me a profitable forex bot that makes 100% every day or every month, then probably Claude's gonna have some issues, right? But if you know step by step, you know how the strategy is going to work, And if you know what your edge in the strategy is, right, then the translating that idea into code is like super easy with Claude. And so that's why I think like the research or finding the edge or backtesting is like a much more crucial skill right now, because you don't need to hire any programmers. So it's all about just having a great idea, right? It's just about, doing the research and finding something that works. So like if you can just stare at the wall, and just think, yeah, and look for strategies. I think that's like much more beneficial for you than learning to code and implement that. Because before it was like almost impossible. Like last year, I spent hours just studying the TWS API, right? So it took me like 2 months to fully understand how to code, using TWS API, and then I figured it out. But that's a time you can actually invest spending into research, right? So now finally, uh, we don't have to do that. Uh, Can you go through how to find and select the pairs you choose? What are your criteria, for example? Well, so today what I'm plan to do is like I already know what products exist, right? So for example, if you want to trade futures, you would probably go to CME or Eurex. CME is like one of the largest, I think it is the largest futures exchange uh, on this planet right now, and you can trade like GC futures, which is gold, stock indices like S&P 500, the Nasdaq, right? And also like MBT futures. So a lot of the assets that you see on MT5 you can trade also in futures, and we're just going to compare the like individual futures contracts one by one with MT5 or like with the ETFs here to see if we can find something. So go through how to find select pairs you choose. So it just pops out in my head, right? So today I want to analyze the spread in gold. Is there any opportunity in gold? So let's look at gold, for example, look at the August contract, right, which has like 10.2 billion volume right now. And then I'm going to compare it with XUSD, right? This is like this CFD spot product. So we can run an analysis between GC and XUSD and see like if we can actually find a profitable setup there. So that's how I do it. And then if I want to like analyze like the S&P 500 futures, which is like the ES, right? So ES futures here. So you guys just go to futures, you select like a specific contract that you want to trade. So here we have one already. So then what you would do is you would just try to compare that with the SPY, right? S&P 500 ETF. And then you compare the pricing between those two and see again if you can find anything like useful for you. So right now this one doesn't have like much volume because oh, actually it does 197 million. I'm not sure. I think the September contract is like still the active one. You can see like here SPY has 85 billion volume, so it's much larger than the December one. But you can also like try to analyze different contract months, right? So here, even though liquidity is lower, 197 million is still a lot, especially for us retail traders. So you can also trade low liquidity assets such as like the December contract, which is higher spread, and that can be good for us, right? Because when you run arbitrage or market making, you can like get better fills because here there's too much competition, right? 25-cent spread. But here a spread is 1 or 1.25. So here you can actually submit orders and compete with top of book to get a better fill. So when you run the strategies, you can like try to run the strategy between the September contract and December contract, compare with the SPY, or you can like run it against individual stocks, right? You can like take the S&P 500, which are 500 stocks, but you can like, create like a sub basket, right? And then compare like a bunch of stocks against a SPY to again run a similar strategy. What's your take on CCXT? Actually, I love it. I think CCXT is a great tool because it unifies all the strategies and tools. Before, I always like said something like, oh, I prefer having like the flexibility to use the API myself because then I can like always optimize and apply the most recent changes of the API. But now when it comes to like dealing with multiple DEXs, like writing your own API client for every API is actually lots of work, and CCXC actually does the work for you already. So I think if your strategy is at like ultra high frequency trading and you just want to have like a very simple strategy, and like something like hyperliquid can also like work with CCXC, right? So I think CCXC is great if, as I said, your strategy is not ultra latency sensitive. Yeah, by the way, Philip, I think you sent me an email like today or yesterday. I've seen it, so after the stream, I was planning to reply to you. But yeah, I assume it was regarding the gravity the gravity project, right? So again, I'm testing it, but I don't mind sharing the client that I have. In fact, while Cloud is actually still working, we can like have a look at the gravity project, and I just uh, actually did something very bad. So give me 1 second. That's why they say that you should be more careful regarding these things, because what I just did wasn't very smart of me, but we can always fix it very fast. So what I did is I leaked my API key. It was a very bad idea. But 1 second. So I leaked my API key, which as a result means that I have to delete it, and now I'm safe. So back to gravity. See, that's the problem live streaming, and that is that all the sensitive things are open PyCharm. But anyways, I delete my API key, which means I should stop my trading bot on my remote server. I'm gonna do it later. I guess it's fine. So when we go to the strategy, right? So here we have the gravity exchange connector. It was vibe coded with Claude, right? So I don't have like much input into the like code, except for the fact knowing what it does, right? So it like can return data from the account, submit trades, and things like that, right? So here this is my like client class for gravity, and so here there are some like WebSocket clients and trade clients that you can use. So I'll be very happy to share it with you later, right? So I'm just going to send it, or I'm just going to upload it to a website once it is done. Yeah, text you because I had some troubles with the bulk orders API call on Gravity. But yeah, again, as I said, so it was all of like vibe coded, right? So using Claude, I don't know like what's happening exactly under the hood. All I did is like provide the API key, and then I just tested the individual endpoints to see if the output is correct. But yeah, I'll be happy to share that, and let me know what you think about that. So today gonna be IBKR options ARB. Actually no, we're still going to look into futures, right? So we're going to analyze. So right now, what is running is my arbitrage project on MBT futures, which is the Bitcoin futures. But then we can apply the same concept, on like indices, gold, and even options. So the thing I wanted to do a lot in my free time is like constructing synthetic futures from uh, from options, right? So for example, if we go to IBIT, right? So I can like type IBIT, which is like an ETF, but even ETFs, they have options too. So if we like look, at the options table here, I don't have any subscribed data, but IBIT actually has quite a lot of options and a lot of liquidity. So if you buy a call and like sell a put, you create a synthetic option, right? create a synthetic option, synthetic futures that basically mimics the same thing like MBT futures does, but it is actually the underlying is IBIT, and we can run the same strategy like MBT against IBIT. We can run the same strategy like on, for example, synthetic futures of IBIT against IBIT itself. And there is like this interest rate component that is like also visible when you construct synthetic futures. They work basically the same. It's just about, efficient execution, because to create a synthetic position, you need to open like 2 orders. So you are paying the commission twice. But there are like a lot of things like that. It opens like many more opportunities, right? So even though the cost to open a trade might be higher, the number of opportunities is also increased drastically because there are a lot of options with different expiry dates and different strike prices. So actually the magnitude of profitable trading opportunities increases by a multitude. And I still haven't like looked into options like that deeply. And so once we, create a very simple strategy where we can run arbitrage between like classic features against CFDs, then I would like look into options later. You should install a VS Code extension to hide dot and values. Yeah, you're right. Like I use dot env, right? But what I did is like if you look at my project. I used the .env, but I was trying to edit the .env from by opening that .env file, and I forgot to close it. So I was doing some work, off stream. And so the other option, of course, is like if you go to PyCharm and you want to set the environment variables like in PyCharm itself, you can also do that. So if we go to like the configuration, right, you can edit configurations, and then here you see environment variables. You can like edit the environment variables inside PyCharm itself, and you will never like have this window open. But this is just me being careless, right? Because I forgot I'm a live streamer, and like when you work with these things, like you eventually have these windows open. But yeah, thank you for that suggestion. Like that's scary, right? With crypto, like sometimes one API key doesn't only have trade permissions, but it also has withdrawal permissions. So if I leak that code and someone would be very fast, they could theoretically like withdraw my entire funds if I didn't have like two-factor authentication. So uh, just letting you know that such risks are there. But luckily, I do have 2FA. So if you want to like withdraw from Hyperliquid, you have to confirm with 2FA from my phone. So I'm very glad that even DEXs have like 2-layer security when it comes to like withdrawing. Hi, to hope you're good. Off topic, do you know MetaDAO? Really interesting time currently. No, I don't know. What is MetaDAO? Is it like exchange, or is it like a new token? Not sure what that is. What do you think will be requirements for developing more strategies in order to maximize the returns? I mean, the requirements are always the same, right? So my strategies, they don't like whether it's classical futures against CFDs or perpetual futures on crypto exchanges against CFDs or crypto perpetuals against futures. It's always the same. It's always comparing the two prices, and so in order to maximize the returns, you just need to track as many assets as you can, right? So it's more about like if you apply my strategy, just track all the assets that you can, and the more assets you track, the more you can like capitalize on very good opportunities, right? So you just have to look like right now, this strategy says that the funding rate arbitrage is the highest out of all the things that we have here. So of course you pour money into strategy that promises the highest return, right? So it's all about the quantity of strategies that we develop, and like if some strategies are more like latency sensitive or are very competitive, right, then maybe it's more about the technical implementation to maximize returns. But in most cases, I think it's just about having a screener and see what makes the most money as of this moment. And so like right now, Hyperliquid is like very good, right? And so the reason why we're exploring more strategies and exchanges is that maybe there is something out there that makes more money, right? Or makes more money for me. So if I were to find a strategy that makes like twice as much as on Hyperliquid now, right, or 5 times as much, I would keep it for myself probably, right? Because on Hyperliquid, like you see like my 100K account here, right? But of course, I also trade like other accounts that I have. So I'm trying to basically, like I'm teaching the high level concept of the strategy, but I think the biggest skill is to have like an overview of everything, of all the opportunities that you have, and then deciding where you want to invest your money. Yeah. Do you think migrating to C++ will help this case? The most quantity, slow latency, as you're saying. Yeah, so if latency is the biggest factor that's, causing my strategies to be not as good or efficient, or maybe they're just break even because they're too slow, then migrating to C++ might be the correct decision, or like moving to Rust or whatever. So I think, but if I see that it's latency sensitive, then I would be more like inclined to code in a different program language that's faster. But right now, my strategies are not as latency sensitive, so I don't mind keeping it Python for the time being. It's like a funding platform for new projects on chain. Right. Let me have a look at MetaDAO then, and um, merchant ownership coin. Wow. Raise USDC, spend it responsibly, win together. Hmm. An ownership coin. Well, I'll have a look at it later then. Thank you. So, so here I'm going to also like, can you create a Jupyter notebook and visualize the historical data and also compute the spread using linear regression. Actually, no, you're using linear regression and compute the spread. Apply linear regression between BTCUSD and IBIT to get to get the correct ratio for IBIT. Well, the thing is, on internet brokers, you can like also extract data from BTCUSD, right? There's actually like on internet brokers, there is actually BTCUSD or Bitcoin. I think it's called Bitcoin actually. And like here, as I can see, there's BTC. Currently, Paxos is the exchange where it's like routed to, and like we can compare the Bitcoin prices here through Paxos. Of course, like the real Bitcoin price can vary a little bit because there are like multiple crypto exchanges. So when we like compute the real time of Bitcoin, another project I want to do is like create like a crypto uh, order book aggregator, right? Aggregator where I like stream prices from Binance, from Kraken, from Bybit, and like all these large exchanges, and then create like a more like aggregated view on Bitcoin. But we can like use this like for reference because it should track it, I think close enough. And so if you want to buy Bitcoin Paxos, you can like do that. I just need to enable some permissions, but it's possible to also like buy Bitcoin here. And so the question is like if you like trade Bitcoin through Paxos, I wonder if you can also trade it as a CFD, but no, you cannot. You can only trade it as a cryptocurrency. And so also another thing is that like I'm trading IBIT right now, but of course there are a lot of Bitcoin ETFs that are not IBIT, so there are like also other like alternatives. In my experience, you can get sub-millisecond coding logic quite easily in Python, so switching C++ not easy worth it. Usually time is much better invested in trying to reduce network latency. Yeah, I would think so, like co-location, cross-connection with your broker servers, and making sure that the infrastructure actually has lowest latency is usually the first step you want to do before like switching to language. And like, when we look at service, right? So I also have like a server in Chicago. So I'm very close to the CME exchange, and like I think my latency is like 1 or 2 milliseconds, which is, in my opinion, like good enough. Like 1 to 2 milliseconds, at least for my type of strategies, is very good. Most Python libraries are wrapped around C++, so actually can happen C++ behind the scenes. Well, I'm happy that you guys have like a lot of knowledge. So a lot of things that I also learned from you guys, teaching me. So thank you for sharing some of that knowledge. And so now we're going to, create notebook and look at the spread between futures and the ETF. And then we can also run the analysis against like MT5 Bitcoin. Like the funny thing is that like if you trade Bitcoin on MT5, most brokers they will charge like 20% annual fee for long positions, and that in my opinion is like super crazy. Like why 20%? Because then if you buy a long position IBIT, that long position is only 5.8%. So let's say it's 6, right? So there's a 14% difference between Bitcoin CFD on MT5 and IBIT as an ETF. I'm like shocked. Like this is like the biggest scam that I've seen, right? Brokers who charge this much. I would never recommend someone to hold a long position with a 20% annual interest, right? And people still do that. Like people still are super hyped about Bitcoin and they don't know how much they're actually paying. Like I think paying this much into a long, it should be illegal basically, right? Other things people just don't know, like the retail traders, they just don't know how much they're actually paying because they don't understand the product or how it's actually priced. What do you think about convert bond arbitrage? No opinion on that. I never tried it. Don't know how it works exactly. Uh, but when looking at bonds, right? Like when we like run arbitrage strategies on futures, the interest rate component has like a very high impact on the basis, right? So when you look at futures basis, the interest rate component plays a big role there. So when we look at bonds, we can like try to estimate the fair value of this premium using that bond. And but I have not like looked into bonds for a very long time, so I'm not very sure how I would do that. So I'm not a bond specialist, basically. Okay, so this should be almost done, and then I will share with you the basis between MBT futures and IBIT and also like Bitcoin, and then we can like try to design a strategy and see like if we can find something profitable. And then, so sorry, like I mentioned in the title today that I want to code a trading bot, but because my demo account is still pending on Interactive Brokers, I will probably like write the first strategy, uh, automated strategy tomorrow, to test my hypothesis. So actually today is more about backtesting. So sorry if you came for the coding part. Um, that's my mistake because I didn't prepare well enough. I just thought I could just create a demo account and start right away. Or I can, just deposit a few $1,000s and start trading. Um, they say the fastest way to production is to deploy it in production. Well, so we'll see. I mean, if I found a very good back test and I see, okay, now is a good time to test, then maybe I just gonna deposit like $2,000, start the hedge, and then we'll see. I think that's going to be like quite interesting. Like look at that, the IBIT spread is like super low. It's just like 1 cent right now. Okay, now it's crashing a bit, but okay. But then the ratio on IBIT, right? So trading IBIT is actually super cheap, right? If you want cheap exposure on Bitcoin, so here the spread is 1 cent. So what's the price of Bitcoin? 64,000, right? So the price of Bitcoin is 64,000. So if we divide it by 36, right? So you need roughly 1,777 IBIT to match exactly one exposure of Bitcoin, right? So if we multiply this amount times 0.01, so the spread basically would be $17. It would cost you $17 in spread to open one entire Bitcoin position, and that is very cheap. It's like super cheap actually. So if you, for example, also look at like the fee, right? If I wanted to buy one IBIT and looked at the cost impact on Interactive Brokers, the fee to open one trade on Interactive Brokers is $1. One. So actually the total cost is roughly $18 or $19 right now. Of course, the spread can widen. Sometimes when it's volatile, it can widen a bit. So it can be like higher, but still it's very cheap. So compared to a crypto exchange, trading IBIT is cheaper than using a taker order on like these large exchanges, which is like interesting, right? Because again, IBIT is an ETF, right? It's a stock, so the pricing works a bit differently than on an actual crypto exchange. How often do you pass through test nets before deploying real capital? In my experience, the exchange behaves differently in test nets compared to production environments. I just deploy in production. I don't trust test nets or demo accounts to see if my strategy is profitable. I prefer just to deposit a few hundred dollars and run it on live. And then if I get good results, then I deposit more. And then when I'm confident after some testing period, I deploy a lot. So from my experience, I just go straight to production, right? Straight to live trading. And it's also the fastest way to develop, right? Seeing small, even tiny profits or losses give you, some type of dopamine, because something's happening. And like I'm a bit impatient, right? Because whenever I have a backtest and I believe it's profitable, then I want to get it out ASAP, right? And not test on a testnet account. So that's like a bad habit I have, right? Just maybe I deploy things too fast, but you could call it a good habit because then I'm very fast with my development. So it has advantages and disadvantages. Once I thought I was a genius. I found a very good strategy. I didn't wait, like test it very long, and then due to some mistake on the backtest on my side, I lost like $7,000 within like 1 day, because I didn't have some risk checks, and like uh risk management in place in my trading strategy, and it was fully automated, and so I lost $7,000. So this was my largest loss. Uh, First of all, it was my largest loss in a single day, and second, it was due to a technical mistake that I created. So you learn from mistakes, and this was probably my most expensive mistake when it comes to trading. Like $7,000 is a lot, right? But I felt a bit sad for a week, but I just kept going because I knew that the loss was due to something that I could fix, right? I just learned to test my strategy more, not over leverage, and just take it easy and slow. But at least like testing in production on a live account with small amount. If I tell myself, okay, I put like $500 for testing, if I lose it, I'm gonna be fine with it. But if you like first week put like 10,000 and lose all of it, then of course it's different. Okay, so here with this spread analysis on MBT. Uh, So this is BTC MBT with the current front month, and this is the IBIT ETF. This is the linear regression. Okay, and uh, Okay, then I'll go through and explain like what the chart means. I just want to change it to Plotly chart. Can you change the charts to Plotly? And then so I'm gonna make some minor adjustments, and then I'm gonna share my thoughts on this like analysis. Like it's no strategy or backtest yet. I just want to show you the relationship between MBT futures, the IBIT ETF, and the actual spot price of Bitcoin. And then you can see, you know, how the ETF and Bitcoin and the futures all are all related together, but are priced a bit differently. And so once you understand the pricing mechanisms of futures against the spot asset, then we can like try to test some strategies and see if that works. Hi, too. Can I ask a question about previous hybrid MT5 ARB strategy? Can the funding rate hybrid JPY cover the swap MT5 is JPY? Isn't it better to long MT5 USD carry trade? Yes, this is actually a great proposal that you have. So, like when we look at USD JPY, currently the funding rate is like negative, right? So if you go long on USD JPY, you will earn money, right? So you will make money in hyperliquid, and on MT5 on USD JPY, like if you go short, then you lose money, right? But so in this case, MT5 has positive swaps, which is 8.9, right? So you just need to compute, like currently, if the funding rate on one side like loses less than it makes on the other side. And so if you go to Arbitrage Lab, let's go to Arbitrage Lab here and look at the arbitrage screen on FX, right? So here you see how much money you would make on USD JPY right now. So right now we have both negative, but in theory, let's say the funding rate on USD JPY is like 0%, right? Because oftentimes, like right now, there's like it's a bit low, which is fine, but a lot of times it's like zero. So if you pay zero funding rate on a short position on Hyperliquid and you go long on MT5, you would make money like every 24 hours on the swap and you would make exactly this amount. And how much is 8.94, right? That's also a question. So 8.94 is actually quite a lot. So this, let's round it to 9. So if we convert it to like this minimum digit, so it's actually 0.009 if we convert it to this USD GPY price times 365, because that's 365 days, that's 3.2, and we divide it by the current price, which is 163. So here the implied annual rate on MT5 is 2%, right? So the long, so the long position that you would be holding MT5 would yield 2% per year. And if you apply a leverage, like times leverage times 25, right? So because Forex is not that volatile, you can go very high leverage. You could create a strategy that makes 50% annual rate, like annualized on MT5. And if on Hyperliquid, your funding rate is still zero, then that's how you make a lot of money, right? With this funding rate arbitrage. So leverage is your best friend here. And on Forex, you can actually afford to go very, very high leverage. Not too high. 25 is actually quite a lot already sometimes. But like if you go 1 to 10, 1 to 15, 1 to 20, probably you'll do fine. It depends on the market volatility. And like JPY is also like a bit, how would I say it? It's a bit under stress, right? Because right now we're at 163. Like it's the highest it's been like ever, right? And so you don't know if like the Bank of Japan is going to intervene or like if there's going to be like a massive sell-off. But fundamentally, right? Like fundamentally, JPY is like under a lot of stress because we can assume that it might increase if nothing like changes. For example, the Bank of Japan might increase interest rates, and then that would cause that price to drop. But we don't know until we have some extra information from Bank of Japan, or whether there will be some intervention. But I'm not like a forex specialist, right? This is like just some my general knowledge on the JPY pair or Japan as a country. So I would be a little bit cautious with the leverage on JPY. That's what I'm trying to say, and that is because JPY is under a lot of stress. What do you think with the Iran war with the ARB on S&P? Well, it's quite funny, because when we look at the S&P, right, like people were gonna say, oh, the stock is gonna go down, like we're like in a war, or like, but like it seems like that the S&P, like if you look at the daily chart here, right, or let's watch it from MT5. So here, US 500. Like I don't know, like again, we're the highest we've ever been, and now we have like some sort of consolidation. I don't usually form an opinion when it comes to like direction or market bias, because my strategy revolves mainly around funding arbitrage or just classical arbitrage, right, or market making. And so for me, the direction does not matter. What matters more is the volatility, right, and the risk. So when it comes to things such as, wars, of course, that affects the market a lot, but I can't like tell you if it's going to be up or down. Like I don't speculate in direction in that sense. I'm more like concerned about the volatility to make sure that I don't get liquidated due to low margin. What do you mean market making? Well, I also like run market making strategies, which means I just provide bid and ask quotes on illiquid and inefficient markets. So it's basically an arbitrage, in a sense that, like in an arbitrage, you look at price discrepancies. In market making, you just quote the spread because you can afford to quote the bid and ask spread both at top of book most of the time. So they're very, very similar, but market making on like DEXs is actually quite easier because there you pay like zero commission and stuff like that, but it's very much very similar. I mean, yeah, the volatility can get very high, but again, I'm not an expert. I'm gonna say it like that. I'm not an expert into saying, okay, there's a war now. Now volatility is going to be high. It's just that, okay, now we have a war, so I'm going to be more cautious, right? I'm going to go leverage 1 to 5 or 1 to 10 maximum, right? So on my large account, like during this war and like these volatile movements, if you look at my like arbitrage on hyperliquid, my leverage is set to like 1 to 10 here, right? So I wouldn't go more than 1 to 15, 1 to 20 in this case. And like for JP, uh, like JP and Japan, right, are under a lot of stress, and the liquid is low here. I go leverage 1 to 5. So it's more about just trying to be cautious, but I can't like give you a professional opinion on that. Yeah, so it's more about just being less aggressive with the leverage, right? So high leverage means more profits, of course, in a funding rate arbitrage, but it means also high risk of getting liquidated. And so, yeah, so here, what we have here is, oh no, never mind. We're supposed to be here, and we still need to finish this backtest here. And I think I'm going to deposit like $2,000 or $3,000 to Interactive Brokers. So give me a second so I can wire the money, because I think I can like, hey, I'm not sure if it's gonna make money, but I would rather have the money to test, and like maybe tomorrow I'm gonna come to you as, hey guys, we already made a little bit of money, or like it's working well, so let's just keep it running. Because once the money is there, I'm like more motivated to do things, right? Because you have all the tools already available to start trading. Okay, so let me wire the money now, and uh, then I'm going to have a quick toilet break. Actually, I'm gonna have the toilet break right now, so if you'll excuse me, I'll be right back, and then we can continue. All right, so thank you for waiting. And okay, there was one more question. So the focus is to expand to IBKR synthetic and explore new opportunities. Well, not only IBKR synthetic, but also the classical futures, and also like the synthetic futures with options. So yeah, this is the current plan basically. And so today we're going to run the analysis on IBIT, right? And then we can also like try to run add the synthetic options using IBIT. So we can also add IBIT options basically. Okay, one more thing. Let me get some water and a coffee. So now we have all we need, water, coffee, and we can continue. So thanks for waiting. So now we have the Plotly chart, and let's look at the IBIT basis basically. So here we have the spread analysis. Can you uh, add a button in Jupyter that will expand the Plotly charts? I'm not sure if like Jupyter can do that. Like in Dash, you have like a button, and like I would like to show you what it looks like on the chart here, right? But here we have the pricing of IBIT, right? So IBIT has like main trading hours, so you can like trade it during mainly during the US session, and like you can like sort of see that like these charts here, right? They like IBIT and MBT, they're being like tracked quite effectively. Like here we can apply like the linear regression, right? So you see like on the x-axis you have the price of Bitcoin, on the y-axis we have the IBIT price, and so if you can regress these data points on the line, it means that the tracking is like very good, right? Because like here you can occasionally see some tracking errors, but that means that there's potentially like also a pricing discrepancy that we can try to arbitrage. And like so my target right now is like to take this data and like visualize it a bit nicer so I can explain to you the like exact process. And like what you see here is also like the IBIT implied price against uh, MBT futures, right? So here on this chart, what you can see is that like here we have like so the so-called basis. So it is a disc. it is the difference between the IBIT price and the futures price. And like I want to show you the convergence, right? That over time, this difference goes to zero. And so as you carry this position long, right? So if you short futures, long IBIT, you will like make money on this premium. And the question is this premium that you gain going to be like overcome the long funding rate of Bitcoin? And the answer is we'll figure that out. And so in spread analysis, I think that the problem with Claude is maybe a bit too smart. Like for me, maybe it's easier to provide the like individual inputs. So let's wait until this prompt finishes, and then I want to simplify this analysis a bit, right? Because I don't like to overcomplicate the things here, and in this thing, I think Claude is doing a little bit too much, right? So, but that's my fault, right? I need to provide the Claude with these specific prompts to actually get what I desire. Uh, but still, the output is very good considering the fact that it should just export and analyze the basis. So we actually that was just the first prompt, right? So I'm going to now optimize it and micro tune it so I can share the data with you. But yeah, so the thing that I'm interested in the most basically is the where is it? Well, now we're editing the file. It's basically this basis chart, right? So while we edit this, um, I'm just going to show later when it's done. And then I'm going to provide you with a very simple formula, right? So we just have to create like a hypothetical scenario where we would, for example, hold that certain position until expiry date. And so at expiry, the basis will be zero. So we'll make money from the contango because we'll be short futures. So we'll always be making money on premium. And then we're going to compute how much we're going to pay daily in the funding rates, or like theoretically on the swap here, right here. So the swap value is minus 5.88. Uh, I need to check also one thing, if they have something called USO or something like that. So here USO is the United States Oil Fund. Hmm. I mean, this is like very interesting because here USO is minus 5.88% statically, which means that if crude oil futures are like in backwardation relative to USO, right? This would mean that we might find an arbitrage. I'm not sure if this is like an MT5 exploit, because MT5 has a fixed what is it called? A fixed swap for all stocks and ETFs, right? And sometimes, depending on the lending rates of the stock and depending on maybe the underlying commodity in futures, this might be an arbitrage on MetaTrader 5. But I think it's probably going to be an exploit because most brokers are lazy, right? MT5 brokers are lazy. They just like to have like a statically defined like lending rates or swap rates. And so on Forex, they do update it like quite on a regular basis. But when it comes to stocks, I feel like this could be an arbitrage. But I wouldn't risk getting banned, right? If this is an arbitrage, then probably um, I wouldn't risk getting banned. But we can try, just as a proof of concept. Like a few years ago, I would always look for these exploits on MT5 in the swaps and always try to make money, and it always worked out. But now that I'm doing it on live stream publicly, you can cause much bigger damage, and I don't want to get sued. So that's why I'm not recommending it, to not get sued by the brokers. MT5 loves to ban pretty easily. Yeah, sort of like props. So props love to ban, MT5 loves to ban, but on interactive brokers, they can't ban you because they have because like in finance, it's either the broker being against you or you're on an exchange against the other traders. And that's why I love exchange traded products like trading futures or in crypto, because the exchange just sets the rules, but the money is flowing between the traders, not the other way around. When the broker is trading against you, that's where you know when there's a conflict of interest, right? So when the broker is actually like booking you and trading against you, you know that when they ban you. Okay, so here we have like an expand button. Let me rerun everything. And I think what I'm going to do is I'm going to now I can't see any charts. I cannot see any charts in the notebook now. And I think part of this project is going to be like super interesting for us because like if you see, for example, ES and SPY, right? So even on a hyperliquid, like a lot of you like I believe are still interested in hyperliquid, we can run like a hedge between, where is it? So there is like US 500, right, which is the index, or S&P 500. Sorry, S&P 500 is the index, but US 500 tracks the ETF, right? So here we can like also try to run an arbitrage on the SPY ETF, because here you see the price is 740, and here the SPY is also 740. So it tracks the underlying ETF and not the futures, which it's actually like nice to see, right? Because then we can like, for example, hedge this ETF against the future. So the strategy that we're going to develop can also be applied on hyperliquid later. So we're actually also helping our project to discover the strategies. Which language would you recommend for algorithm trading, C++ or Python? I think I would recommend Python, because Python comes a lot with like data analysis packages. You can run backtesting and so on. And I think nowadays it's more important to design profitable strategies than the technical implementation, because then if you use Claude or AI, it can take your backtest and it can like optimize the strategy so it runs smoothly, even though you learn with Python. So that's my personal opinion. I prefer Python. What do you think about arbitrage exchanges? Well, this is what we're doing right now, right? So we're doing arbitrage between like crypto exchanges or like futures exchanges and CFD platforms. So we're always trying to add multiple platforms for this arbitrage. How ETF versus futures will work? Well, just look at the pricing discrepancies and relations between the ETF and the futures and see if you can find an edge there. And that's what we are actually doing right now. Okay, so we need to fix the charts here, and then I'm going to add like some extra comments. And maybe what I can do is I can actually run a second terminal, right? Because I can run two terminals and we can like work on two different things, right? Let's be a bit more productive and run two things at the same time. So BTC basis, right? So here I'm going to share you a BTC basis chart. So what I can do here, put in this folder. So I want you to visualize the historical data on BTCUSD and on current MBT futures contract. Please specify the month of that futures contract. In the next cell, please compute the basis. So this is going to be a more simple notebook, so I can like share explain what I want to like build here. And yeah, as I said, I still need to wire the money and run the test. And then we're going to create a very simple script that can like buy and sell on Interactive Brokers, right? So we're going to ideally short MBT futures and buy IBIT. And we don't have any data feed, which is okay because we can just send the market order and blindly trade, which is not recommended, right? Or I can just order the data feed because probably we're going to, trade here for some time actually. So I think we have like not much to lose anyways. I mean, hyperelliptical versus gravity. Yeah, you can like run multiple strategies between dexes, and that is legitimate. But yeah, for now, I'd like to focus on this project because, uh, as I said, I'm a bit like tired of working in the dex space because, as I said, it's always the same thing. Just look for funding rates, arbitrage between NT5, and it's always the same. And I think I have like higher success of, not higher success. I want to diversify. I want to diversify my strategies where I also trade futures and options and things like that. And for me, it's like more exciting, right? Because I believe like Hyperliquid is like the biggest DEX right now, right? Where we can trade. And because I already like sort of finished what I wanted on Hyperliquid, I think that like focusing on small DEXs is probably fine. Like if you have small amount of money, but like maybe lighter, right? Might still be okay. But I think Hyperliquid is fine, and I would rather just diversify by going back to my previous strategies. And the thing is that before Hyperliquid, my main strategy was interactive brokers, but I didn't implement uh, my strategies with Claude yet. So I'm interested if I can actually like improve the strategies from last year and see if I can do something similar as I did on Hyperliquid, because I think I have like a lot of potential to make money also here. What do you think on options on Deribit? Never trained Deribit, so I don't know. Oops. I heard you mentioned lighter. What experience do you have with it? Noise and downsides? Well, I ran some gold arbitrage strategies at the start of this year, and it earned like a lot of money. But it was just like a one-time thing. And then I moved back to Hyperliquid. So I just saw very huge funding rates on gold and decided, okay, let's code a very simple hedging script over a weekend. So, but like I traded there just for a few weeks and then moved my money back to Hyperliquid. Not because it's bad, but because most of my strategies were running on Hyperliquid already. And I just, capitalized on this like single one-time opportunity. The gold was on IBKR. What do you mean by that? Yep, I also traded, no, so lighter decks. So now we're talking about lighter decks where I trade gold, but I also trade gold on interactive brokers too. So gold, it's interesting. Like gold was such a hype, asset. Like when it rose to 5.6 thousand, like it's crazy. Like the gold returns over the past years it's like insane. Like let's have a look at gold, guys. Right, so we see like since 2000, where's the low? The recent low. Let's say like here the recent low is like in September 2022, and it went from 1000 like something 600 1700 to like 5.6 like at the peak here, right? And now we're seeing like a big sell-off and drawdown. Like I don't know if it's gonna end here, but like it was crazy. Like I was holding a very high leverage position. Like I had like a 1 to 10 leverage position at the peak here, and then every time I saw his drop, this was the one time I almost got liquidated in gold. It was kind of scary. But like when we were at this peak, somewhere in February or January, I made $5,000 on a single trade on the gold funding arbitrage when we reached this peak because I was in a short position and the long funding rates were like so crazy. Everyone like had the FOMO wanted to go long, and I was making money on this like long funding rate because again everyone was buying, 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 which pushed the price up. And of course, then the funding rate for short positions to provide that leverage to the long traders was like super juicy, and yeah, that was crazy. So yeah, in those times, like opportunities are great, but it also got very risky because when this like drop came down here, uh, I need to quickly deposit my broker, right? So I was like, deposit, deposit, deposit. And like the broker platform, IC Trading froze for like 10, 15 minutes. I believe because everyone tried to deposit. And so it overwhelmed the like client area website. And so we need to wire like 30K dollars ASAP to maintain our position, right? To not get liquidated. So that's like a story in gold that I had at the start of this year. I mean, those 0% taker fees in Lighter look really tasty. I'm not gonna lie. Yeah, they're amazing. But like the taker fees are nice, but again, the problem is I would say liquidity, right? So like on CME futures, if you look at gold, we are in the billions, tens, tens of billions, right? Daily volume. So if I wanted to run like a high volume strategy where I like place like one lot gold, which is like $400,000 in a single trade, it would work out great because I would have almost zero slippage because the liquidity is that high. And on hyperliquid, it's more like low liquidity but better opportunities. And like for a long time, I've been thinking one thing, right? And it's this one. Like a lot of times, you see, I have like 100K account that makes $60 and a 10K account that makes $56, right? So I sort of feel like there is like this diminished return the more capital you basically have. And I feel like the 10K count like outperforms the large one by 2 to 3 times. And so for that reason is what I was thinking. So maybe I should just on Hyperliquid like diversify into like small position sizes on multiple assets and maybe put half of my funds to interactive brokers so I can like actually maximize my returns. And like it's not like I'm not happy. I'm like super happy, right? Because this month, like for the past 30 days, we made plus 3.5 thousand USD on this 108K account, which is like a lot of money, right? 3.5% per month is like crazy. And if I make like 3% every month, so 3 times 12, then I make like 36% per year. And that's like a super amazing return, I would say. But I think we can like improve it by actually increasing number of strategies, because if you look at the return of the 10K account, then the results are like much different. Here we're like 6%, so we have like twice as much money, but we have 10 times less like on the small account, right? So here the return is like double basically. We on the 10K we make 6%, on the large one we made 3%. Uh, Okay, so lighter was in the start of the year. I wonder how it worked on IBKR. The high was crazy on gold and silver. Yeah. Well, IBKR is going to be more competitive, right? So here the opportunities are going to be much smaller, but we can have higher volumes, right? So here the market is more efficient, and also the mechanism is a bit different. Here we have perps, here we have futures. So the perps funding rates can like screw you up a bit, right? Because sometimes they can like move against you, and you don't want to exit like basically the perps are a bit different. Like here in futures, your profits are sort of like locked in, right? So even though the futures basically can oscillate up and down, um, you basically like lock in some of that profit because the like basis convergence is more predictable than uh, on the DEX, right? Because if you look at like JP225, right, like you will never see that on Interactive Brokers. Here the implied annualized funding rate is 50%. Right? So 50% of your position size, and you see that SP 500 makes a lot of money in funding rates right now. So I think the funding rate component on DEXs is like my main edge, right? So I make more money on the funding rate. I think on Interactive Brokers, we're going to make more money like on the spread, right? Or like in the premium and not like hourly like yeah stuff. It's going to be like quite interesting to see. But we're still like in the early stages, right? Where we still need to test the strategy. And all we need to do is like we're just going to compare and see. I think that's the main thing like we should do, right? Just just try it and see what we'll do. Okay, so let me try to wire the money to Interactive Brokers. So I'm just going to log in. What do you think about exiting intraday aspect? Yes, so on Interactive Brokers, I was actually trading a lot of strategies intraday. So most of the strategies lasted minutes to hours. And I most of the time closed my trades overnight because at that time I didn't have overnight monitoring. So I had like better sleep when I didn't have to monitor overnight. But now with all the risk management monitoring and like security checks that I have with the Hyperliquid project, like here the control panel hasn't crashed for the past month, right? So here I'm super confident that this project Hyperliquid sort of also has very robust risk monitoring. And I think if I implement the same precaution on Interactive Brokers, I can also run it overnight. Do you think to add some pair trading ID on IBKR? Yes, this is like our main project. Hello, Teo going, is this your new project or not? Yeah, so we're coming back to Interactive Brokers. Like the concept's still the same. We're still going to try arbitrage or like run a pair of trading strategies between two assets, like IBKR futures against MT5, or like synthetic futures from options against MT5, or like run a funding arbitrage between like IBIT ETF and MBT futures. So this is like what we're like trying to do right now. Your name was Harry, right? If I remember correctly. Hopefully I did not mix it up. So uh, hopefully your name's Harry and I have good memory. Great. So great to still remember names. Yeah. So oftentimes, guys, I get like this. How would I say? It's not like an existential crisis. I think that's like too extreme to say, but when I do something for too long, I get bored of it, right? And like if you look at Hyperliquid, it's all beautiful. Like I could be on a beach now and like whatever, just enjoy the profits and not worry about anything. But I think when a project gets like so deep and like I have a choice to, do this like copy paste on other dexes, I was like, okay, screw it. Let's just go to Interactive Brokers and have fun here. Because yeah, I love starting new projects and like discovering new strategies rather than staying in the crypto dex space. So we're going to chill with Interactive Brokers now, and of course I'm going to share the code and strategies with you. So yeah, I'll share it with you later. So Interactive Brokers is now our main project right now for the time being. And of course, like if you have questions about Gravity, Hyperliquid, and everything I've built so far, or like questions and props, feel free to ask them, right? So it's more like just me, just doing what I like, which is like researching. That's why the project's called ATJ Research. So I don't want to be like create a project where I just do Hyperliquid for the next 20 years. And like yeah, I could create the best multi-dex arbitrage trading thingy, but I think the most important thing about my project is not like selling the dashboards or selling hyper strategies. In the long term, it's more about looking for various trading strategies across different markets and exchanges and platforms. So I would like to, have like, so what is ATJ research about? It's about creating like a list of strategies that I've developed, right? And making algorithmic trading accessible to retail traders as well, right? Because most of the strategies that you see here are a little bit more advanced, but like, I believe like if I can like explain or show you exactly what I'm doing on live stream and like with on my website, that even retail traders can like understand it. So I want to sort of share with the retail trading community that trading is not just speculating on direction, like gambling on Bitcoin, or on gold, but that you can like learn these strategies and you don't need expensive setups to do that. So more want, okay, now I know. I want to show you different perspectives how you can trade basically, right? With these systems, and that uh yeah, we should all forget ICT trading and manual trading and the gambling and trying to draw geometric patterns on charts. So I think this is what it's about. Like I'm trying to show you that you can trade in many other ways than believe it's possible. But a lot of times you will see it's just going, like what I specialize in is like understanding the pricing of each product and comparing them with a related product, right? So GC futures, gold, GLD ETF, and then you have like gold on multiple exchanges. You also have gold as a perpetual futures. You have PAXG. So like if you understand how each product is priced and how they're related, then you can like run these strategies. So like it's still sort of going to be focused on arbitrage, but we're always like trying to understand why things are priced a certain way. And so it's less about direction, as I said, more about understanding the market pricing, liquidity, and the ebb and flow of how order books work. And like if you understand that, because most traders, they don't understand liquidity or order flow, because all they trade is just some price they see on the chart, right? The only thing you can do is speculate on the direction when you trade with like an OTC broker. But when you want to step up in trading, in my opinion, uh, what people should actually go into is like, again, understanding liquidity, understanding order books, like seeing where you can buy and sell at certain levels. And like this skill is sort of lost in the retail trading, because all the brokers that you trade, they offer simplicity, right? MT5 is very simple, and when you trade, simplicity encourages laziness, so you will never learn the advanced concepts if you stay on these platforms. I think it's also an issue with the trading industry that they strip away all the necessary information, and all you're like left with is just this brainless buy, sell, buy, sell, buy, sell, because you can't do anything else. But if you like go to internet brokers and like look at the book trader, the order flow, start learning maybe about footprints and seeing exactly, because if I see a trader talking about liquidity and they trade on MT5, I'm asking myself, okay, you're trading liquidity, but you don't look at order flow. So what am I supposed to believe, right? Because you can say, okay, I bought during a liquidity gap or whatever. He doesn't see anything, right? A trader on MT5 doesn't see liquidity. He can always pull it out of his, ass, let's say, and say, okay, uh, I see liquidity, but to actually see the liquidity, you need order flow, and that's what's, for example, how do I say it? It triggers me, right? It triggers me when traders speak like they know their stuff, but then they trade on MT5 and literally they don't see anything, especially, yeah. So you see, I was venting a bit, but when I see traders on MT5 and they try to look like professional traders, MT5 and professional are, it would be a paradox. right? It's like saying you're like racing in a car, but your platform is just a little car toy, right? It's not an F1. Is a project Hyperliquid dead? Is it just a stable version and running on its own? Yeah, so Hyperliquid is like sort of stable. I'm very happy with the current state of this project. It's been running like every day. So I will keep trading strategy for a long time, right? So I'm just going to share results here. But in the meantime, while it's a stable project and it's running, and you guys feel free to try it out, right? I'm just going to focus on like new strategies because you never know. Maybe I'll find something better. Maybe I just want to diversify. So there are a lot of things that I can actually do in the meantime. Like I could stare at this control panel all day or like count my profits in this dashboard, but I think that's not like effective use of my time, right? For me, it's enough if I check it like a few times per day, see how profits are going. Maybe I find like better strategies. I just change some of the strategy settings here, which of course I will do. But I think to use my time effectively, the best thing I can do is just researching strategies. What do you think are the top 5 topics? I'm not sure. It's a topic that you want to discuss right now. So everyone has probably their own stuff. What we call learn about liquidity overflow. I don't know. I think like my next project that I'm going to do is I'm going to create like an order book and order flow aggregator, right? And the thing with order flow is that like there are books on that, but I think it's like about watching, observing, creating hypothesis, and testing that hypothesis, right? So we're not going to start order flow trading by saying, oh, here we have like a big buy wall because there are a lot of limit orders, right? And probably price will bounce off of that. We're gonna like approach it very scientifically, right? What happens when we see like a big order book imbalance, which means there are a lot of limit orders on one side, thin liquidity on the other side? Is price likely to rebound from this level, or is it gonna break through this level and create another breakout, right? Uh, then there's a question of spoofing, right? Like when like there are like market manipulators, like people say like spoofing is illegal, right? But I still believe markets are full of like manipulations. So maybe like some buy walls on some illiquid assets might just be some spoofers who just want you to buy at that level, so they can like cause some market movements without the fill. So I think learning about order flow is about first getting the order flow data or getting like this, as I said, order book data, and then creating a hypothesis, testing that hypothesis, and then designing a strategy based on that. Right. So a lot of things in trading, I believe, is all about running some tests on your own hypothesis rather than learning some from someone. Like what you can learn is like what is order flow, right? It's just basically like if you look like Interactive Brokers is nice because you can see the things that you cannot see on MT5. Let me just open a new chart here, right? And we can like, so here we can like open order book or flow like data. So here, if we go to book trader, right? So here, what you'll find is the order book, right? So here you see like the last trade, the current like top of book liquidity right now. So here you see that on what asset is this? Nice. You're right. So here we're on IBIT right now. So this is IBIT, and here we see that here we have amount of IBITs at top of book, and here we have amounts of IBITs here. I don't have level 2 data here, so you'd have to subscribe to see the depth, to see how exactly it looks like. And then the next thing that you have is like times and sales, right? So if you go to times and sales, what you'll find here is that like all the trades that happen on IBIT across different like exchanges, right? So you have like all the transactions, and using this data, you see much more than if you just traded BTC as a CFD. right? And the way I would describe is that, like, yeah, you can drive a car and you might manage just during BTCUSD, but you don't see the full picture, right? In trading, information is actually the most valuable thing that you have, because with information you can make decisions that can be profitable, right? And some people, they say, oh, I don't need to know more. All I need to do is just look at some price, draw a line, and that's my strategy, right? I mean, yeah, they can do that, right? They can like do that, and maybe if they're successful, then sure. But if you're unsuccessful in trading, right, and you're struggling finding good strategies, your only tool that you can do is just, using the chart. But if you look at liquidity and you, for example, get level 2 data to see, you know, things such as order book imbalance, right, or thin liquidity, like where should I place my entry and exit levels, right? Because if you see that there is like a lot of limit orders, like here in the way, and your take profit is down here, then it would take much more energy to get a take profit. So why not just exit the trade ahead of time, because you see the order book, and here you see how much people are actually buying or selling. So here you see exactly the order flow, and this is just something I wanted to mention, right? So even as a retail trader, if you don't trade algorithmically, I think learning how prices move by checking the level 2 data in the order book and checking the order flow might give you an extra edge compared to just trading on MT5. So that's the main thing I'm trying to say. How to backtest order book strategies, given how your trading policy changes, the order book state, and our players' policy? Well, me personally, I'm just saying, I like don't have never run like a proper backtest. So order book is something like I tried to implement after, uh, just struggling with MT5 initially. So I moved to like order book trading, and I learned a lot about like the how do I say? Basically, I just got a new perspective, right? But when it comes to like backtesting order book strategies, you just need to order level 2 data and then look at certain patterns that are related to the current order book. So you can like write very simple like algorithms, like here there are like high levels of liquidity or like a big buy or sell wall. And when you identify these patterns, you can then try to run a backtest if price is more likely to reverse or not. Then you can like do like a statistical test if it actually has an effect on the price. And of course, like if you interact with the order book and you start trading there, you affect the order book. But for most like retail traders who have very small volumes, they have very small impact on the order book. And so your trading activity as a small retail trader, because it has like minimum impact, means that you can run quite good like back tests, right? Um, Whereas on Hyperliquid, like when we started like arbitrage and Hyperliquid, I saw like that I actually started competing with those people, right? With the exchange. So on Interactive Brokers, like when you trade with very liquid assets, I don't think you should like worry about affecting the order book as much compared to if you were like a big hedge fund. Do you have any suggestion on getting trading permission for IBKR futures? Uh, well, like my suggestion is that if you want to trade futures, then get the permission, right? And like I think IBKR has some questionnaire whether you understand the product, right? So of course, if you trade futures, it's important to understand how futures work, what are expiries, you trade on leverage and margin, what are liquidations, understanding like the individual assets that you're trading. Is it also like cash settled the futures or like with physical delivery? Uh, Interactive Brokers also forces you to close the trades like in advance, right before expiry date, because they want to avoid the physical delivery. So these are the little things that you should learn or like understand when trading futures. And like for me, it was a little bit difficult in the beginning, but like after a few weeks, I eventually started to understand. I think if you go to the CME website, right? If you go to CME futures website, they actually have like very nice courses. So for example, if you go to CME Group, go to the education section. They have very good education if you're a beginner and want to start getting into futures basically. And they'll have like courses on like metals, commodities, indices, treasury bonds. So they, in my opinion, they have like very, very good education on their website. So just go to CME if you are interested in that. Okay, so here we have the BTC basis. We couldn't connect. The connect failed. Maybe let's use client ID 22 and try that. Can you use Plotly chart and make the charts as large as possible? Nice. So here we have like the basis chart. So you can see here is that here the basis is like around, like starts around like 1000 and over time like decreases over time, and like at expiry it's gonna be 0. So this is what we're going to work on. And here the annualized carry is 2.7% because it's 2 days to expiry. So right now the Bitcoin funding rate is actually quite low, and that might make sense because in a bear market, I feel like the demand for leverage, which means people holding long positions Bitcoin, is like worse because Bitcoin right now is like has one of the like worst drawdowns like in a while, right? So I mean it's just a cycle. So Bitcoin usually always like spikes up, goes down, spikes up, goes down. But right now, I feel like traders have like more of a bearish sentiment right now. So probably that's why the current premium Bitcoin is not that high, because traders simply don't want to hold long Bitcoin positions. If anything, they're actually looking for a short or like flat bias. And we can actually see that in the premium, right? In the futures premium, because the higher the premium, the higher the demand for long leverage. So this is like how to understand the basis on Bitcoin. So if the basis is high, like you take the basis divided by the days to expiry, which gives you the basis per day, and that gives you like the percentage to see how high the demand is for Bitcoin. And you can apply this logic also on other assets. So now we're just going to apply Plotly charts and going to see how that will play out. And so right now we're doing it on the July future, but I think we can run an analysis on the August Bitcoin futures also. So the money could be on the way soon. So hopefully like if I don't find anything today, then of course we don't need to trade. We don't need to force a trade. But if I do find something interesting, then of course I'm going to place a trade and run the experiment, right? Because my assumption is that most of the time Bitcoin premium, like last year was around 8 to 10% all the time, right? So if I make like let's say 10% short on the premium and pay like if you look at IBIT and pay 6% on the long CFD, my net profit is 4%. And then if I like leverage this position like times 2 or times 3, then of course like I can make like a 10 to 12% annualized return by like running a leverage position. And like again, that is why I call this a funding rate arbitrage, because we take the implied annualized rate from the premium on the futures and compare it with the long funding rate on IBIT CFD. Okay, so here my Bitcoin basis is done. And the question is what time frames are the candles? Can you make sure that they are 1 minute? And I feel like we could like run this strategy on like Data Bento because they also have like an API. Interactive brokers is like fine if you just use it for trading and like just need recent market data. But I think the quality of data in like if you take it far into history is not that good. So when I like try to analyze for multiple months, I would actually prefer using Data Bento as a provider here. Okay, so maybe what I should also do, like when I look at the charts, like it's taking the trades, but I think the better thing to use here is mid prices. Can you use mid prices to run the analysis? So instead of like aggregate trades, I prefer like using mid prices so I can see the pricing based on the top of book data. So we're going to use mid price snapshots, and I think that would create like a more accurate analysis. And so maybe about the rating, we can also like talk about like liquidity and contract months because a lot of people like ask, should you trade a July contract or a September, October, November, December? So of course, like they all have, all futures contracts are basically have an expiry date, right? So they all expire this specific month. And I think like if you're starting out with futures, right, you shouldn't overthink that. Just trade the one that's like the most liquid. So right now, the most liquid one here would be the December contract, right? So you see the December contract has 25 billion volume. I think there's also the August contract somewhere down here. Yeah, we also have the August contract, which is very active. This August contract is 16 billion, so it's either this and this. And then like as the contract is reaching expiry, then like a lot of the trading volume then shifts to the next contract month, right? And so when we run this strategy, like we can like focus on like the main contract months with the highest volume. But you will also see that, you know, some contracts like have a bit less liquidity. Like here, this one has 600 million, the September contract, but the spread here is like 60, right? So when a contract has very low volume, for example, this is the, no, this one July is on expire soon, so I won't trade it. The liquidity is very low because then internet brokers will close out your trades basically when it reaches expiry. But when we look at like the October contract, right? The October contract here has 3.4 billion. I mean, that's still quite high. So we have December. Here we have the November contract, right? Here, there's also zero volume. Like what I want to show, maybe the example is on DAX, right? Here we have the DAX, right? which has 470 million volume for the September contract, but 1.7 million for December. And here the spread is very huge, 78 like euro. That's the spread. So the lower the volume or liquidity, the higher the spread. And maybe you can try to apply, a much tighter spread on the DAX futures for December, and that way you can like try to compete with the other market makers here. Like it's a similar concept like on hyperliquid, low liquidity equals better opportunity. Um, and that's what we can also apply on interactive brokers. The funny thing about Bitcoin is also like, you have the swap at 2300, so here, or 2359 broker time, and the market is closed only for a minute, right? So I was thinking, why don't we just close the trade on Bitcoin right before market close, and then reopen it after market open and dodge this nasty, swap long. Of course, you would have to pay the spread for entry and exit, but Bitcoin is quite cheap, $12, as you can see. So like we can try to exit Bitcoin here at, with the low spread, because closing opening would be cheaper than paying the swap fee here, and that way we could like save some money on the swap rates, which again the broker might consider an exploit. I'm not sure how the broker would react to this. Okay, so this is nice. So here we have the price between Bitcoin and MBT. So here you see that the price is like being tracked quite closely. So you won't see much difference here. But if you go down to the spread chart, then I don't see much here. Can you show an example on MBT futures where the future is nearing expiry and the basis becomes 0? So here I want to show the convergence, how the basis decreases over time. And then I'm going to compute the current like funding rate, the implied funding rate. Actually, what I'm going to do right now is I'm also going to, like, you don't need a backtest, right? I just wanted to show you the chart, but you can actually, I'm actually just going to subscribe to MBT futures here. One second, how do I do it? So MBT futures here, we have to, because I have some money, I have like 277 US dollars. So what I can do is I can subscribe to the data feed. So here I'm going to go to manage market data. And here you see that CME real time will cost me 145 per month. Today's the 29th. You know what's quite annoying on interactive brokers? They charge, like if I were to buy the subscription now, I would pay 145 USD just for 2 days. And then on the first, they would charge me again, right? So I don't feel like actually buying this. I would just wait until the end of week. I will subscribe to an external data feed provider. So I'm going to do through that Data Bento, because here again, I would be charged 145 and then 145 again on the first. So this is like not worth it. Yeah, it's kind of annoying. So I'm actually going to skip that. Or like what you can do is like you can skip the data feed like entirely and just have some external data feed. And all you use interactive brokers for is just a trading, right? So you would just submit the trades, get a trade confirmation, and you would just use yeah, external data feed, and that's also completely okay. And yeah, that's the annoying part here. Like on Interact Brokers, I used to pay like for a full CME page, like COMEX, CME, Eurex, and everything. I paid like $400 or $500 per month for all these data feeds, and like it got quite expensive, and I was quite annoyed because I have two companies, so I had to also like trade for two companies, and then you basically double the expense on interactive brokers. So yeah, let's have a look at Data Bento. Might be better in my opinion to like play around with Data Bento. Okay, so here we have the XAUSD CFD, and here we have the commodity. Okay, so yeah, let's skip this. Let's wait until the week's over, and we're just going to continue back this thing. Data Bento isn't cheap either. Like, it isn't cheap either, but I can use that data and provide this data feed to all my accounts and companies. So if I have multiple interactive broker accounts and like multiple whatever, I can, you know, just use like this one central place and distribute across multiple companies when it comes to real-time data, right? And for historical data, you can just export what you need. So the historical data is not that expensive actually. So I mean, still compared to Interactive Brokers, it's like much better, right? Because let's compare the pricing with Data Bento, right? Let's look on their website. And like when I use their API, I loved it, right? It's very simple. So here on futures, they have here. And so if we like only trade on the CME, right? So here CME is here. So here the standard package costs $200 per month, and it includes COMEX, CME, NYMEX, where you can trade crude oil. So all these like separate exchanges, in total they cost $199. And like if you subscribe to all these four on-trade brokers, you would pay like 140 times 4. And 140 times 4 is 560, right? So, and on Interactive Brokers, it's only for one user, right? So here you would have the data for one user only. Here on Data Bento, I could use one shared API key and use it for all my trading bots that would like run independently. So actually, I'm going to subscribe to Data Bento. I think that would be better. So in that case, I'm just going to create an API key. I will create an .env file here, and hopefully I won't leak it like today. And then, I mean, Data Bento, it's not that like sensitive, right? Because I have, what is it? Like I have like maximum usage limits per month. So the worst thing that can happen is I just use up that limit. Okay, so this is what the client area looks on Data Bento, right? So here we just create API keys, and here the API key can basically be used. So here I'm just going to create a new one. Actually, I don't use the element now, so I can just, you know, delete this and create new one. So how it works is that on Data Bento, you just create new API key, just call it key1, API key1, just give it a name, and then you just copy this, and then you can connect to Data Bento using this key. So I'm just gonna create a new one, delete this one, and then I'm going to show you how we can use Data Bento instead. And then like I'm going to stream real-time data for my project. Okay, so I have my API key created. So I just, pass it in. Now I can close my .env. So now it's in my env folder. So there's no way to leak it. If I leak it, it's not so bad. And so now what I can do in Data Bento is like to get the real-time data. Here I would have to subscribe to CME, and then like we can run all the strategies, and like on Trade Brokers, if I wanted to, analyze GC, I would have to connect to COMEX. If I want to trade DES futures, I would have to connect to CME. And like it makes everything easier because here with one single subscription, I can connect to all these 4 exchanges without having to pay extra. So here what I'm going to do is I'm going to upgrade to standard to get live data here, right? So here we just click on upgrade, and so now yeah, I'm just going to verify that, and now we're paying $199, and we also get free history export, and it also includes L2 data up to 1 month. So we can, like when I talked about like order flow uh, and order book imbalances, right? We can do that. Okay. So here I just need to sign some papers. And okay. Nice. So I'm connected to live data now. So I have like I can now use this API key that I generated, and I can now stream live prices. So what I can do now is here, if I go back to Claude, now that I have live data, can you create a real-time price monitor for CME for MBT futures and BTCUSD from actually and BTCUSD from IBKR. I've just upgraded my subscription and I have live data for MBT futures. So we're just going to create some price monitor, and then like by streaming the real-time prices, we can just compute the implied annual rate from that. I'm using CR chart right now to get data, but that isn't actually, it's actually tempting indeed. I mean, yeah, so for me, it's just one simple API key, you connect to it. I'm not sure if I'm violating some of the terms and conditions because, I don't have a commercial license for Data Bento. So probably, I'm not allowed to like share that data with you. But I think just showing you, how Data Bento works shouldn't be, like, it shouldn't be too bad, right? So I'm just going to show you how we can build an app or a trading bot using Data Bento. And like that's what like we're mainly focusing on. Like you can use any data feed provider. You can use like interactive brokers, or I don't know what provider, if CRI chart can also distribute the data to you. And a lot of brokers, like when you actually trade with that broker, you get that data for free actually. And for retail, it's also like very cheap, I think, anyways. But yeah, $200 per month isn't cheap either, I realize, because yeah, I pay $100 for cloud subscription, now I pay $200 for data feed, and all those servers they actually add. I think like my monthly cost for like data feed, VPS, and everything trading related is around like $1,000 at this point. Like it's actually adding up a bit, and that's why we need to trade more probably to make up for our expenses. But yeah, it can get quite expensive. But as a retail client, you don't have that much overhead probably. Pardon. So the strategy for trading bot is based on arbitrage or something new. Yeah, it's still the same thing. We're just comparing futures pricing with the underlying ETF or just Bitcoin, and see if we can like find any pricing discrepancies there. So now we're going to create like a real-time price monitor, and we're just going to run this to see the current pricing discrepancies between IBIT and MBT. And like this should be like quite easy and simple, right? It's actually a very simple project. So today we're just looking at the price and discrepancies, and like if we do find some funding arbitrage, like that would be great. Meantime, let's look at the profits here. Oh wow, we just closed our position on S&P 500. Nice. So we're plus 190 today in total, and like now we're allocating more positions on the Japanese yen and the Japanese index, which is like really nice. Nice. So we're almost like reaching 5% profit on this large account, which is like really cool. Now, sometimes if you don't look at this chart, like suddenly you're just $150 richer. It's a good feeling. Oh, I've added a data bento API key in .env. I want to stream the MBT data from data bento. All right, so Claude misunderstood with the upgrade with the data feed. I forgot to mention I have a data bento API key now, so yeah, let's implement that. So I guess like we don't need internet brokers because now with external data feed, so that's a good thing. So because we have external data feed, we don't need to subscribe to internet brokers, and we'll save some money, which is going to be nice. And we can like use that data feed to provide to multiple accounts. Uh, I think like if we go to like trades, right, and open orders, like we still get a confirmation if it's like active and getting filled. So as long as we get the order confirmation that we're getting filled, that's basically all I need. Right, and there's also one thing that I need to check, and like when you trade gold, right? Just one thing with gold futures. Actually, I can delete this, and then I can put back. Like these are GC futures; they're huge, right? One contract size on futures is worth 100 units of gold. So the position size on these contracts is $400,000 right now. So most of you people probably should not trade the full contract size because then the P&L swings would be huge. You can also trade a contract called MGC, right? So MGC is the micro futures. So if you just trade a micro, what you'll see here is that like here the August contract, like if you compare the volumes, right? So here they're just different. It's just a difference in contract size. The micro one has 10 units of gold, so it's 10 times smaller than a GC contract. And like even though the volume is lower, it's still 2 billion, and 2 billion is like more than enough to trade, you know, even as a retail trader. And then there is also 1 ounce gold futures. So it's 1 single ounce. So this one is like even 10 times smaller than the MGC. And here the liquidity is still okay. It's like 21 million, right? So you see that uh, these three contracts, they reference the same price of gold, but it's just about the contract size. And like here, the 1 ounce one, you see that the spread is actually quite high. So actually, I might be interested to try that out because here if the spread is 4, that is actually something that I could consider like arbitraging, right? So that for me is actually quite interesting. But I need to see the real-time data, right? So same same underlying asset or price, but different contract sizes, different liquidity, and also like different spread. And in theory, if you trade the same thing, but it's still, you know, a different product, you can basically try to make a strategy based on GC, MGC, or 1 ounce, right? It's also like different types of traders. Most retail traders, they will trade the 1 ounce or the MGC, and like the large GC contract is like more like institution heavy, right? Because uh, most people don't trade like a whole GC contract. It's just too expensive. Like within a few minutes or hours, you're just plus or minus a few $1,000s, which most people, you know, can't afford to risk. Okay, so once this price match is done, so what are the next steps? So the next step is to, you know, compute the annualized rate, and then tomorrow I think the funds should be ready and they should arrive in Tracker Broker. So then I will place my first trade. We will try to, you know, open like code hedging script that will buy, sorry, sell the futures, buy IBIT, and then we're going to observe if we can make any profit there. And then if IBIT doesn't work, that's fine because we're right now just, you know, experimenting. We can run it on gold and some like American indices or like the German stock index. So we have a lot of like assets that we can play with. And if you find anything interesting, then of course I'm going to share that project with you. So like today's the first day, so hopefully, you know, we'll get somewhere eventually. Okay, so here we have our live monitor using data bento data. So here I'm just going to run it and see what we have here. Okay, so here the current futures basis is 10.9 basis points, right? So here, if we just look at one price, so here the MBT futures here is 430 and BTCUSD 368. I'm going to add some extra changes here, and I want to see the spread in absolute values in USD. So here what I'm going to do is I'm just going to copy the path. So in can you display the spread uh, using mid prices? I also want to display the spread in absolute units, which is USD. Also add the uh, add days to expiry uh, for the specific futures contract. Can you also show other futures contracts too? like further 2 months, and that is also I want to compute the implied annual rate by taking the premium divided by days to expiry divided by the current BTC price. So here we're going to add, some minor modifications, and then maybe I can just create a very simple dashboard, create a table, and show you what exactly it looks like. And so after that, oh, we'll see if and you can see like I just added like the API key in my .env folder, and we're like already streaming like the real-time pricing from MBT futures, right? It's that easy. Just add it, you say, hey, stream live pricing from Data Bento, and it's already done. No need to study the API documentation, so we can like actually just focus on designing the strategy and checking, doing what we need to do, mainly just create a profitable system. Okay, so here we're going to update the changes. Can you create a simple real-time dashboard where in Dash where multiple futures contracts are compared against BTC? Okay, please use a dark layout. So here we're also like working on a real-time dashboard while we're doing this, and yeah, we're going to compare that with that real-time dashboard. I mean, dashboard's always fun, right? Then you guys don't have to look, at like something like this, because I guess you can't see that much here. But when I like run the dashboard, then we can also like display the charts, show you the basis, and like we can also like this dashboard probably is going to be like the first attempt to create like this arbitrage monitoring tool. So then we can like enable like multiple symbols or assets. But the thing is, I don't have a commercial license, right? So in order to do that, I would need a commercial license. I know that historical data can be provided like with a 24-hour delay, but for real-time data, probably the best thing I can do is that each of you, if you want to run the strategy yourself, would just order your own Data Bento API key and then try the app from your own, device. So that way you can like download the device, use Data Bento, and then run it on your own using the Adabento API. Okay. So the interview brokers project is going to be like, I think it's going to be a huge project, right? Because again, CME futures, largest futures exchange on this planet. So I think like we're still missing out a lot, not like looking into it. And like if we sort of get something similar like this hyperliquid arbitrage project, then it's gonna be great. Like profits are nice, but we can always like try to look for something. Okay, so it is done. So now here we have the dashboard. So just run this dashboard and let's see. So here on this dashboard, we have MBT N6 and MBT Q6. So N, I believe, is July and Q is August, if I'm not mistaken. And U is, there's no live data for U right now. So here Q6 has 30 days to expiry. So like if you look at the like the mid prices, right? So here the spread here between Bitcoin and Q6 is 260. And because we have 30 days to expiry, let's just double check if it's computing correctly. So here Q6, we have 260 divided by 30. So it's roughly $8.6 per day divided by the price of Bitcoin, which is 64,500. So here the implied annual rate is actually 1.3%. So I actually don't think it's correct. Um, so here we're using mid price BTCUSD, which is 235. So here is price 230. Actually, it is correct, right? So 230 is the spread divided by 30 days to expiry. That's interesting. But here, the implied annual rate is probably wrong. So, yeah, we'll have a look at it. So let's add some extra adjustments. In the table, I want to see the columns mid futures, mid price futures, mid price spot, and remove bid ask. The spread is defined as mid price futures minus mid price spot. So here we're going to add this adjustment. Have you made a hyperliquid arbitrage trading bot that we can download? Yes, right now, like the results that you see right now, like on the live stream. So this is my hyperliquid arbitrage project. So it's hedging hyperliquid against MT5, and like here you can like see my current trading results. So you can download it on my website at ATJ Research. So if you go to like strategies, and here go to hyperliquid. If you're subscribed to the membership on the website, you can download it and like try it yourself. Like here's a setup guide video, how to set it up. And here you can also see my current live trades. So I also like share my public track record. So yeah, feel free to try out and let me know if you have any questions. Okay, so let's continue with this one. Interesting. The spread on the 1 ounce futures is actually 75 cents. That's actually quite interesting. Or 2.5 even. Wow. I think the 1 ounce futures might have some potential if I think about it. So let's proceed. Okay. Okay, great. So here, if I restart the dashboard, so now we applied some, small little changes. And so if I run this dashboard, so what you see here is that we have our like futures contracts, right? Here, this is the mid price for futures. This is mid price for spot. And so here, this is a spread in USD. And so if you divide this value by the days to expiry and multiply it by 365, and then, yeah, divided by the mid-price futures, then I think we should have the correct value. So for example, let's have a look at like this is interesting, like MBT N6 has like implied rate of 13 or 10%, right? And that is because like when the spread is high and the days to expiry is low, you get like these high variations. So maybe let's just focus on maybe the Q6 contract. So it's like 250 is the current spread divided by 30, then times 365. So this is the amount that you have like within a year, and then we divide it by 64,000, just 64,000. And so here the implied rate is 4.7%, which is correct. So the funding rate, long funding rate on Bitcoin futures right now is like 4.8% compared to the U6 contract, which is like 4.5%. Right, so here you see how the premium can be converted into this annual rate. And so if we short MBT futures and go long on IBIT, which is this one, then the strategy wouldn't work. Because here in this strategy, what you have is, unfortunately, like the long funding rate is higher than the implied annual rate. And I remember like when I did this strategy, like research strategy, I didn't like trade it because I had different strategies. But when I look at the annual rate last year, the implied annual rate was at around between 8 to 10%. And that for me was kind of crazy. So right now, it looks like Bitcoin, no one wants to hold a long position on Bitcoin, right? So and we can understand, we can like see that, right? We can see that like from like this trend here that Bitcoin's falling, which means people are more likely to exit Bitcoin right now. And and so yeah, so but what that could theoretically mean is that if you look, for example, on Hyperliquid, right? So we can like also like maybe think about, can we like hedge it with Hyperliquid? Because most of the time on Hyperliquid, if we go to Bitcoin perpetuals, so here we go to BTC, right? So here we go to BTCUSD. Uh, a lot of times the annualized rate is 10% on perpetual futures. So in theory, if you short Hyperliquid perps and go long on the MBT futures, So again, you can like try to construct a profitable funding rate arbitrage where you short hyperliquid and long MBT, because on hyperliquid most of the time it's around 10%, so short position make 10%. Here long positions on futures would take like eat away 5%, and so the net profit could be 5%. And so this is like what I wanted to like share with you, like what you could do with MBT. And so this was just an example. So today I just wanted to show you, the relations between the MBT futures and the underlying like spot Bitcoin price. And so throughout this week, we're also going to like run this analysis on other assets as well, which is going to be US indices and like also like commodities, right? So this is going to be interesting. Like for me, also interesting is that like here the implied annual rate is 30% right now. So in the short term, people are still like holding long positions here, but I don't know when you're forced out to close that position. Also, if the position is cash settled, then probably you can just leave it open. I have to check that, but you can see that like this short-term implied rate is like very high. It's like 16%. So in the short term, like you could theoretically like hold a short position on Bitcoin along the spot, and this would be like a very short-term like nice profit basically, right? But again, the spread is very low, it's 36. So like if we also take into account like transaction costs, probably this wouldn't like yield that much. So yeah, anyway, so today this is like what I want to show you. So this week we're just going to focus on interactive brokers. So thank you for joining today's live stream, and I'll see you guys later. So have a good day, guys, and thank you for watching.